Welcome back to Midcap Radar. Well, earnings are coming in thick and fast. The next management on our show is SIS. Delivered a good set of numbers, strong double-digit growth for the second consecutive quarter. Dhiraj Singh, who's the CEO at SIS, joins us now to discuss more. Thank you so much, Mr. Singh, for joining us. Well, first up, double-digit growth as far as Q2 FY26 is concerned. Do you hold your guidance for mid-teens growth? Along with that, you have told us that the combined revenue run rate on an annualized basis will be close to 15,000 crores. So do you hold on to all of these numbers?
Absolutely. I think on an organic basis, we have achieved a 15% year-on-year on the revenue side.
Right.
And if you look at our revenue growth, is basically of three components. Is the organic growth that we have through volume increase. The second is what we get through the price wage increase, and which has not really increased in the past few years, and we hope that will happen in the coming year or so. And the third part is the inorganic. The deal that we did, AP Securitas, there's been no impact of that in the Q2 numbers, but it will come in the Q3 numbers. So as of now, the run rate without the AP Securitas for end of September was 1,300 crores. So annualized basis, it is about 16,000 crores. And then the impact of AP Securitas will also kick in from Q3. So we are well on track for a guidance of 15% plus on the revenue side. But the good part is the margin improvement. That is also improved. And now at the group level, we are at 4.5% with all three segments showing a significant improvement in the margin, both in absolute rupee value as well as the percentage terms.
So 4.5% will be the peak margins as well, Mr. Singh, because in Q4 of FY25, we had seen margins close to 5% as well. You are weeding out low margin contracts and low margin, overall segments as well. So what's the guidance there?
So the focus had been on the India facility management and the security. On the security side, we had achieved about the 5.4% margin for the past 1 or 2 quarters. Even in this quarter, it's about that number. The good news is on the facility management side, which we had given the guidance every quarter, we expect to see a 25 basis point increase in the margin. And on a year-on-year basis, it has increased by almost 1%, and we are at about 5.2% on the facility management side. So India is doing pretty strong on the margin front as of now. International, yes, we still have some issues to fix in 1 or 2 of our businesses. But there too, we have increased our margin from last quarter 3% to 3.3%. But there's still some headway to go there. And once that reaches the equilibrium of about 4.5% internationally, then we should be back at the group level of about 5.5% or so.
Okay, Mr. Singh, you also alluded to the fact that you're looking to take a certain amount of price hike. So what will be the blended price hike you will take across your portfolio, and which portfolio is expected to see the sharpest price hike? Any pushback from customers?
So our business is a cost-plus model.
Right.
It's a cost plus a percentage, and the cost is a direct function of the minimum wage. And as you might be aware, over the past 10 years, there's actually been a negative increase on a inflation-adjusted basis for the minimum wages. That definitely needs to be corrected, and I'm sure the government is looking into that. Over the next 2 years or so, we expect it to be averaged out. Typically, it's been about 5 to 6% on a yearly basis. And so if we do the catch-up, which some states have already started doing, but over the next 2 years or so, there should be about a 10% correction as well.
Okay, when you're speaking about the overseas business, we understand that you also have a certain proportion of revenues coming in from overseas. We believe you do have some presence in Australia. Correct us if you're wrong. What is the outlook over there, and what kind of growth can you see there?
So it is a significant business in Australia. We are a dominant market share leader out there with 22% market share of Australia.
Right.
The revenue side, it's been very strong. It's grown about 18% on a year-on-year basis.
Okay.
And we are seeing some strong growth on the infrastructure side, steel, energy, railways. And the unemployment part in Australia, which had caused a slight issue on our prices, the economy is relaxing a bit. So that will ease on our wage pressure. So the margin should start seeing some improvement. Besides that, we are doing a lot of SG&A optimization in the Australian market. So the revenue is strong. Now we are focused on the margin side in Australia.
All right, take that point, Mr. Singh. Thank you so much for joining in today with the outlook on the business going forward and a lot more. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets on the other side.